Imagine this. You're staring at your phone, heart pounding, as your $10,000 investment drops 30% overnight. Gone, just like that. Do you sell in panic or hold on, praying it bounces back? What if I told you that split-second choice isn't yours? It's fear hijacking your brain, the same fear that wiped out trillions in the 2008 crash. Hi, I'm with MoneyMind, where we unpack the psychology behind your money moves. If you're tired of emotional roller coasters ruining your portfolio, hit that like button now and subscribe with notifications on. We drop these mind-bending insights weekly to help you invest smarter. Stick around because today we're diving into how fear and greed secretly drive the stock market, with real stories that'll hit home and game-changing fixes to break their grip. Picture Sarah, a single mom in Chicago, scraping by on her nurse's salary. In 2021, she saw Bitcoin skyrocket on TikTok. Greed whispered, "This is your ticket out. Double your money fast." She poured in her savings, ignoring the risks. When crypto crashed 70% months later, fear took over. She sold at the bottom, losing half, then spiraled into sleepless nights, blaming herself. Sound familiar? This isn't just bad luck. It's psychology at work. Nobel winners Daniel Kahneman and Amos Tversky proved it in their prospect theory back in 1979. We hate losses twice as much as we love gains. That's loss aversion, folks. It makes us freeze or flee when stocks dip. Now let's zoom out to the market. Greed fuels bubbles. Think dot-com mania in 2000. Everyone chased tech stocks like Pets. Com, a company shipping dog food online with zero profits. Greed spread like wildfire through herd behavior, a psych phenomenon where we mimic the crowd to feel safe. Studies from the Journal of Finance show herd mentality drives massive trading volume spikes. Prices soared 400% until fear flipped the switch. The Nasdaq plunged 78%, erasing $5 trillion. People jumped from windows, literal fear-induced panic selling. Robert Shiller's research calls it irrational exuberance, where greed blinds us to reality and fear then triggers mass exodus. Fast forward to GameStop in 2021. Greed hit Reddit's Wall Street bets. Regular folks piled in, driving shares from $20 to $120 closing peak, squeezing hedge funds. It felt empowering. David versus Goliath. But when reality hit, fear crashed it below $40. Thousands lost life savings. Why? Hyperbolic discounting. Our brains crave instant rewards over long-term sense, per behavioral econ research. We buy high on greed highs, sell low on fear lows. Dalbar data shows average investors underperform the S&P 500 by over 4% annually long-term because of this emotional trading. Pros beat the market by staying cool. We don't. Real talk. This hits newcomers to U.S. markets hard. Take Ahmed, who moved from Pakistan to Texas for a better life. He worked 2 jobs, saved for his kids' college. In 2022's bear market, inflation spiked, stocks tanked 25%. Fear screamed, "Your American dream's dying. Withdraw now." He cashed out his 401k early, paying penalties and taxes, left broke. Greed had lured him into meme stocks before. Fear sealed the loss. Studies show newcomers often trade more emotionally due to unfamiliar markets. It's not weakness, it's wiring. Ever heard of the Fear and Greed Index? CNN's version tracks it daily on a 0-100 scale. Extreme fear, 0-24 signals buy opportunities. Extreme greed above 75 means sell-offs loom. Backed by VIX volatility data, it shows fear spikes trading volume hugely. Anchoring bias keeps us stuck too. We latch on to buy prices, refusing to sell losers. Confirmation bias? We cherry-pick news confirming our greed bets. All this creates boom-bust cycles. Tulip mania in 1637, where bulbs cost as much as houses, crashed 99% from pure greed. But here's the emotional gut punch. These aren't just numbers. They're divorces, delayed retirements, shattered trust. My friend Lisa in New York watched her retirement fund halve in 2008. Greed pushed her into housing stocks pre-crash. Fear made her sell everything at the bottom. She worked till 70, missing grandkids' milestones. Heartbreaking, right? Yet markets recover, S&P 500 always has, averaging 10% yearly long-term. Emotions steal that from us. Okay, enough pain, let's fix it. Solution 1, master your bias with a trading journal. Every trade, note why, greed, fear, review quarterly. Fidelity Research shows journal keepers outperform non-users. Actionable. Use apps like TraderSync. Log emotions pre-trade. 2. Set iron rules. Dollar cost average. Invest fixed amounts monthly, rain or shine. Vanguard studies prove it beats market timing attempts 2/3 of the time over 10 years. No more greed buys or fear sells. For newcomers, start small in index funds like VTI. Low fees, diversified. 3. Pause with the 48-hour rule. Before panic selling, wait 2 days. Fear fades, logic returns. Behavioral finance trials cut impulsive trades significantly. 4. Diversify ruthlessly, never over 5% in one stock. Bonds, ETFs balance greed rushes, rebalance yearly. 5. Use tools like the Fear Greed Index religiously. Below 25, buy dips. Above 75, take profits. Pair with stop-loss orders at 10-15% below peaks, automates discipline. 6. Build mental resilience. Read Thinking Fast and Slow by Kahneman. Meditate 5 minutes daily, it calms fear centers in the brain. Real win. Ahmed, our Texas newcomer. He journaled post-loss dollar cost averaged into S&P ETFs. 2 years later, up 40%. No more emotional wrecks. You can do this too. Fear and greed don't own you anymore. Which bias trips you most? Greed bubbles or fear freezes? Drop it in the comments below. I'll reply personally. Share this with a friend losing sleep over stocks. They need it. Like if this clicked, subscribe for more Money Mind psych hacks, and turn on notifications. Invest wisely, stay calm, your future self thanks you. Thanks for watching. See you in the next video.